There is some important things coming this week, specifically around the crypto markets and driven by Jerome Powell. Now, history tells us Jerome isn't the most forthcoming with pumping markets, but this time it's different. I want to break down exactly why Trump is urging for these Fed cuts, and more importantly, why, well, we may well just be getting them sooner than you think. All of that in this video, and if you want to stay ahead of the market, make sure you hit that subscribe button, and don't forget, smash a like on the video, send it to a new all-time high. With that being said, let's get into this video. Okay, so let's start here. This is the federal funds rate, or what's more commonly known as the interest rates. This is, well, what everyone is looking for to drive markets, jobs market, and when you hear Jerome talk about the Fed funds rate, this is what he's talking about. It's ultimately the interest rates that as consumers you're paying. Well, we are ever nearer to seeing a decline in these fund rates, which generally are very optimistic for risk-on assets such as Bitcoin and cryptocurrency. What you can see here on this chart here is actually over the course of the last year, we haven't seen a lot of change. We've been hovering around 4.25 to 4.5. What's interesting though is if you were to go back a little bit further, let's say for example, you bring up the total year, which goes all the way back to 2002, you can actually see that in certain points, we were actually significantly below. Now, I know what you're thinking, well, that's obvious too, but in certain areas, we were down at 0%, as you can see here between 2020 and 2022. What we can generally see though is bear markets of Bitcoin and certainly downtrends in the crypto asset markets generally coincide with the Fed funds rate going up. A better way to look at this is here. And on this chart, you can see all these green lines. Well, these are previous Fed decisions. And what you can see here is that in moments in time of the previous bull markets, you can see how the Fed interest rates are directly linked to when the markets finish. Now, what's important to think about here is if you take 2021 as an example, which was what everyone said was the craziest bull market we've ever seen, after that, we saw a massive spike in Fed funds rate, i.e. the interest rates were going up. And obviously we then saw that steep decline in the risk on assets. Bitcoin obviously dropping back down to a previous low. So why is this time different? Well, right now, you've got Trump urging Jerome Powell to cut interest rates. There's a number of indicators that say that this should be absolutely a thing. Even just the price of a barrel of oil is significantly declining. Bitcoin surging over 3.5%. And more importantly, we're actually seeing the stock market and the S&P 500 rally as well. But this is tied directly to the jobs market. Yes, job openings, not quite as big. We all accept that. Jobless claims, though, we talked about this previously, is down. And this is ultimately what the Fed is looking at. We know price and cost of goods are coming down as well. So it's really difficult for the Fed to not lower its interest rates. Now, again, just to start off, we are not expecting to see these rates come down this time. We obviously know that this is this week. But what we have done with the jobs market is, well, opened up the opportunity for a June rate cut. Lots of people now talking about 4 rate cuts in the year. The first one potentially coming in June, although we need to see a little bit more data coming in. PPI could give us that. But certainly when you start to look towards July, this could be where we start to see a decline. 4.25 to 4.5 is where we're currently at. You fast forward to December, the expectation of the markets is that we lose nearly 1% of interest rates. This would be very bullish for the cryptocurrency markets. And the fact you've got Trump urging to do it, the fact you've got more and more oil coming online and cost of goods going down, it's hard to think that it wouldn't. And you're also expecting things like Goldman Sachs and banks are looking to get to these rate cuts coming in. And if you've got banks starting to really talk about it, they are positioning themselves for what I believe will be this move in the market. We've seen, banks start to certainly look at cryptocurrencies in a bit more different light set, but also you can see that the banks are getting ready. In fact, Barclays and Goldman Sachs said on Friday they were expecting the US Federal Reserve to deliver the next interest rate cut in July after a stronger than expected jobs report. They'd previously forecast a rate cut in June. However, data on Friday showed non-farm payrolls increased more than expected in April, with the unemployment rate steady at 4.2. And this is a key thing to think about. The unemployment rate is steady. The market's starting to get important. This all ties in perfectly to a move that I've been talking about on Bitcoin and cryptocurrency now for the last couple of weeks. In fact, we are now starting to see the network absolutely skyrocket. Over 900,000 active addresses now on the Bitcoin network. And this is a very bullish signal. Sentiment is returned to the market. Optimism is here, driven hugely by institutional inflows. Look at this. BlackRock buying huge amounts of Bitcoin, nearly $675 million just on Friday. And you can see here some of these big numbers. In fact, they bought $1 billion over last week. And the overall market, barring one day, we saw massive inflows. This obviously is very optimistic as the market starts to turn to the upside. And like I said, more addresses, more activity on the market and on the network is very, very bullish. And we haven't actually seen this for 6 months. So this tells us the market sentiment is shifting. And equally, you can see here around global M2 hash rates, and we're looking for that MACD cross that we've been talking about for a while. But here's the reality of it. Bears hate M2 charts because it goes against bearish at times. But like it or not, M2 is leading indicator for Bitcoin with an 83% directional correlation. When we see M2 go up, the fact of the matter is we generally see the price of Bitcoin go up. The facts are the facts, and that doesn't mean that this has to play out exactly. It just means that there is only a 17% chance right now that it doesn't. And I think it's important to reference this. We talk about the global M2. We've also talked about federal M2, and it is all going in the right direction. What we're looking for, though, is we need to see just a little bit more confirmation on the charts. Here is the daily for Bitcoin. You can see that we're still trading in this green chart that we drew on this chart now about a month ago, maybe slightly less. MACD is very optimistic right now on the daily. Where we're looking for is the cross on the weekly. We're still slightly underwater on the MACD on the weekly chart, so keep your eyes peeled on that. But this could certainly come this week, and I think we're going to start to see that move. So I guess if we double right back to the very start of the video, watch out. Wednesday, you're going to see some increased volatility in the market, but I think we're going to get a dovish Jerome Powell. I think he's going to talk about the market being stable. I think he's going to talk about potential rate cuts, albeit my view would be they won't move quickly on it. And this could push it into July. If he were to come out and be in a world of actually the labor market feels really strong, there is a desire from the Trump administration to bring those prices down, in line them with some cuts they're going to do, then we might get a dovish Fed and a rate cut in June. So let me know what you think about all of this in the comments down below. But trust me, it is about to get pretty interesting in the cryptocurrency market. So until next time, thanks so much for watching. We'll see you soon. Bye-bye.